you champion buying into consumer stocks, and you believe in just one simple theory: India will grow, we will consume more, and we will consume better.
Correct.
But the data, which is consumer FMCG sales, auto sales, multiplex footfalls, mall footfalls, all of them are saying that consumerism has taken a backseat. There is a slowdown. How would you defend your hypothesis?
Okay. so let me go back. Okay. So if you say that, because ultimately when a consumer wants to buy or doesn't want to buy, it frankly depends on the animal spirits, as they call it. So let's go back 20 years. And 2000, 2001, the headlines, okay? GDP is slowing down, anywhere around 3.8 to 4.8%. Bank NPAs at more than 10%. We had car sales, passenger car sales coming down by 40%. We have M&HCV falling by 25%. There were a lot of companies which were declaring lockups. There was significant amount of downsizing. And same thing is happening now. And then between 2001 to 2008, in 6-7 years, market went up 6 times and there was extreme euphoria. So I think it's never different. It's always the same.
Always the same.
It's always the same.
Let's turn to the screen, and we've got 3 big questions for you, and we'll try and address those questions one by one. They'll just pop up in a second now.
Okay.
Is the consumer demand sustainable when job creation is not happening?
Okay. So I would say excellent question, because I also keep thinking about it. So one has to look at, is the environment changing? So yes, the government has put in its effort to change the environment by reducing taxes on manufacturing. That's the first step according to me. And this will definitely push manufacturing. If you see Mr. Modi's address on the 15th of August, he talked about tourism. I think that's it can be a huge, a huge space where a lot of employment can be generated.
Globally has shut down, Cox and King India has shut down. Where is a bubble there? I mean, where there's a boom?
So that's the thing, right? So this is the time to invest. This is not the time to say that, okay, I will also shut down. This is the time where you put in more money. So again, going back to 2000, most of the engineering companies had significantly, downsized themselves. And between 2002 to 2008, we had Voltas going up 40 times. We have Alfa Laval going up 60 times. So that is the case. You need to restructure as of now and then move up. So that is what will happen. I'm sure jobs will be created. Coming back to the demand in consumers, it's all about increasing per capita income. So between 2010 and 2019, our per capita income has gone up roughly 2 times, from $1,000 to about $2,000. If you go to see anecdotal evidence, if you see Malaysia, Singapore, Thailand, even Japan, Mexico as well, one sees that once the $2,000 limit is crossed, within 7 to 12 years, the per capita income goes up more than 3 times. So if that is going to happen in India, why worry?
Okay, my second question to you, and which again is the obvious question, which is, there have been instances in the past where consumer demand has slowed down.
Okay.
And the skeptics and naysayers have been proven wrong.
Passenger vehicles is a classic example. In 2000, I don't remember the exact time, it may be 98, 99 or 99, 2000. But the passenger vehicle, demand or growth had degrown. It had degrown by 40%. And after that, if you see, there has been a consistent growth in passenger vehicles. So I'm not saying passenger vehicles could be but there could be a lot of other things. Like if you see electricity reaching every home. So that's a big opportunity, because if you go back and see in the United States, around 1946, the electricity penetration was about 47%. It went, by 1970, it went up to 100%. The AC sales in US went up from 45,000 per year to 2 million per year. In India, in rural India, you may not find refrigerators and ACs. AC sale, typically, it has gone down significantly. But the opportunity is massive. So that will continue to grow. So it has happened in the past, it will happen again. Okay. So no
Let's
issue.
address the third question now, which is, these are some of the P multiples right now. But the third question which we want to address is, high P multiples, are they capturing the secular growth which you're pointing to? So let's look at the high P multiples. Here again, we are looking at just 1 year forward data.
Yeah.
Like they say on Wall Street, that price is what you get, value is what you pay.
Yeah.
Investing is not about buying gold at the price of diamond, it is buying gold at the price of silver.
Absolutely.
These are great companies, but are they outpriced? And those P multiples, there you go. They'll just, sometimes graphics also get lazy.
I understand.
But by the time the P multiples are getting loaded up, I guess the viewers pretty much know that these are expensive stocks where P multiples are rich.
Absolutely.
How do you defend that?
Okay, so if you see in history, these companies have done very well. So typically, if you believe that India will grow at, let's say, a compounded growth of 8%, add 4% inflation, so 12% nominal growth over a longer period of time, these companies can definitely grow at about 50% higher than
the
that.
graphics is there. Britannia 50 times, Colgate 44 times, Imami 25 times, Godrej Consumer 38 times.
Yeah.
Can you actually make money if you buy the stocks at these P multiples?
So I won't go company specific, but I'll tell you the reason that if a company can grow at about 18% top line, it can comfortably grow by 50% more its bottom line. So bottom line can grow at 27%. So if that happens every 2.5 years, its profits will double. So at the most, what will happen? A 50p today in 2.5 years will become 25p, and it is still growing at about 20-23%. So then it becomes cheap. So when you look at a 10-year CAGR, you'll still get a 20% CAGR. So that is where it will come.
Example which I've been often given by veterans on the Wall Street is, अरे भैया HUL को देखो, 1994 से 2000 में भाव कहीं नहीं गया.
बराबर.
So why can't a time-based correction kick in? And which
So
could be multi-year time
1994 से 2000 अपना per capita income भी उतना नहीं बढ़ा था. So now what I'm saying is that what I believe in rather, that the per capita income will increase rapidly, and that is the reason why I'm positive on all these companies to deliver higher growth.
Why do you think the per capita will increase?
Anecdotal evidence. It's anecdotal evidence, as I told you earlier, that take any Southeast Asian country and you will see that between 2000 to say 6000, the growth happened very rapidly. In fact, it's a cliche now, which is the demographic dividend, as they call it. But during the demographic dividend period, countries can grow in the initial phases, countries can grow sometime in double digit, and that's real growth. Add to that inflation and it becomes very high. So that can happen in India, and I think the only thing is that, yes, government needs to put some things in perspective, and they're doing it already. So I think things will change.
Is autos in a good and a sweet spot for an investor? Maybe not for the management right now, but for an investor, because auto stocks have corrected 30, 40, 50%, P multiples have come down. If you're confident of consumer demand coming back, maybe autos will also revive?
So yes, autos will revive, but whether they will deliver the kind of growth they have been delivering earlier, I have my doubts there. So it will definitely revive. I mean, most of them in a short span of time, or let's say couple of years, once the demand revives, they may go back to their original prices. But whether they will be consistent compounders, I have my doubt. I would rather bet on white goods.
The stocks you buy, they rarely change. I mean, you've been buying the same good old stocks from 20 years now. One or two stocks is what you buy and you sell.
Yeah.
When we met last time, you said you were bullish on insurance as a category.
That's correct.
All these insurance stocks have done phenomenally well. I mean, insurance stocks are sitting at an all-time high.
Yeah.
Are you not worried about A, pricing there, and B, concentration?
No, I'm not, because I think the opportunity is still massive. Take, for example, I'll give you an anecdote. I always believe in anecdotal evidence, so pardon me for that. But just the other day, my driver came to me and he said that yesterday I had taken my wife to Juhu. So I asked him, did you take her on a bike? He said, no, I didn't take her on a bike. I said, what happened? So he said that normally I don't take insurance only. Once the bike is, after that, for the first 2 years, after that, there is no insurance. But now they have become so strict that I have to take insurance. In fact, when I had met some of the insurance companies, they had the same problem. They said that the insurance is not renewed, but the new laws would change that.
It's compulsory now.
It's compulsory now. So that makes a lot of difference. And the demand can be, because what has happened is that especially in two-wheelers, they're well penetrated. But the insurance, the repeat insurance was not happening. That will start happening now. in addition to that, general insurance still has a huge untapped potential. So I think they will do very well. So no problems there.
If I could just take a leaf from what we understand from the veterans of Wall Street.
Yeah.
And the famous investor, Warren Buffett, I think he's got publicly and said that, look, I'm not that bullish on auto insurance.
Correct.
Because auto sales will plummet.
Yeah.
Can that be applied in a market like India? We are nowhere close to what is happening in America.
So I think there the growth is 1-2%. Here the growth is significantly higher. So I don't think we can apply it right now. Over a longer period, maybe 15 years down the line, possible. But we have enough growth. 15 years, 20% compounded can be huge.
Okay. What's happened in general insurance is very interesting, that you have government which used to own large part of the market. It's vacating it. We've seen that happen in telecom. We've seen that happen in airline. We've seen that happen again in case of many more industries. In life insurance, that is not the case, because LIC is still the dominant player.
It is,
and they're still in a commanding place. So I buy an argument of market share gain in general insurance companies. But life insurance, competitive market, and LIC, a government company, dominant player with a better brand.
So I think, there will be companies who will need more branding. It will happen because since, as you said, it's like Colgate, long time back, people used to say, "Mujhe Colgate chahiye." So it's something like that. Hame LIC karwana hai. So to change that takes time, but that will happen. That will happen. Another thing with LIC is that the principal is guaranteed by Government of India. That is not the case in HDFC or any other private insurer. But I think over a period, these companies are large, these companies are solid companies, and people will start moving to them. So that will happen.
Okay, just a follow-up on life insurance. You have two types of companies in life insurance. I'm just trying to break it for the benefit of our viewers here. ULIP dominated franchises and non-ULIP dominated franchises. Which way are you leaning?
I would prefer to non-ULIP.
Okay.
Non-ULIP.
And why is that?
Over a longer period, they will have higher profit margins.
Because of the agency channels?
Yes.
Okay. You've liked retailers in the past, whether it's a Titan.
I love that.
You still like retailers. You must be the only one who says, look, I love retail stocks. Why are retail stocks in India doing so well? DMart, look at the commanding premium it has in terms of a market cap. Look at Trent. Aditya Birla Fashion, Aditya Birla Retail, not far away from its 52-week high. India is the only large country where retail stocks are doing well and retail business is doing well, because the world is feeling the heat of Amazon.
So Amazon is a way in which retail will also happen. Most of the current retailers will also go online. Second thing is that before Amazon happened, we had Walmart going up by 5,000 times in the US. So still a long way to go in India, and by that time most of these retailers will also go online. That is one thing. Second is discounting is not the way to go, because otherwise Amazon would not have got into brick and mortar. So I think it will be a mixed model, but they will continue to. The opportunity is massive. We have not even seen the tip of the iceberg. It's massive.
Why do you think Indian retail will not face the heat of an IKEA or other global players when they will start coming to India? Carrefour may come to India. You never know who else could come to India.
So the opportunity itself is massive. That's what I'm saying. So we have a market which is growing. Overall retail, I think 3 lakh crores is being added every year. So all the players, existing organized players put together, are not even 30%, 20% of that, of the growth which is there. So it's a huge opportunity. Even if a Walmart comes in or a Carrefour comes in, it's still a long way. Some of them have failed in China. So it's okay. It's not so easy. Indian market is not so easy. Apart from DMart, most of them, especially in grocery, are still seeing the challenges. We had H&M, we have Forever 21 closing down in the US. So ultimately, it's all about how, especially in apparel, you have to see how fashions change. So you have to be up to it. If you are there, then you can continue to be a winner.
What would you not buy in consumption? Where consumption may grow, stock prices may not grow, or consumption which is growing today, the pattern may change.
Correct. So pharma, according to me, is consumption. But as of now, pharma stocks are a bit. They have lots of issues. So as of now, I'm not so bullish on pharma. I'll wait for some time and then take a call on pharma. Other than that, in normal consumption, yes, to some extent, I will be looking at their growth rates. That is very important. Like rural-centric companies, a lot was expected out of them, but they have not been able to deliver. It could be because of leverage, it could be because of a lot of things. So I would rather, as of now, I'm a bit wary of them. I'll see how they deliver. Because since the opportunity is very high, even if once they start delivering, I can buy still at a later stage. But as of now, I'll be away from them.
Staples or consumer FMCG companies were growing because they were increasing their penetration.
Yes.
From every district to every taluka, every taluka to every gaon.
Correct.
That those penetration levels will not increase now.
I agree.
Where do you think classic FMCG companies would go when A, penetration is not going to increase dramatically, B, the way products would be distributed via internet and via the new connected bandwidth of India would be very different. So the moat around distribution for FMCG comes to a challenge now.
Yeah. So if you go back to United States, why I go back to United States is very simple. That it probably followed a same path as India has just started following. So when the retail companies just started coming into the United States, that time if you look at top 5 companies, they were all FMCG companies. 35 years later, the top 5 companies were all retailing companies. I think that is what will happen. So in next 10-15 years, I wouldn't be surprised if you see at least 2 retailing companies in the Nifty itself.
Another way to bet on consumption is that you buy financials.
Yes, I agree.
HDFC Bank, a classic play on Indian retail franchise.
Absolutely, I agree.
Have you shied away from buying finance companies or NBFCs which are retail dominated franchises?
So yes, you can say that NBFC I missed out completely. But as far as banks are concerned, yes, we continue to invest in banks. We like banks which are retail centric, and we will continue to buy them.
Markets always tend to look at price to book for financials. You don't track them that way. Why is that?
Opportunity. Again, there is a massive opportunity there, and I would rather look at ROAs and ROEs. So over a longer period of time, if a bank says that I'll move my ROEs from say 8% to 18%, if my worksheet says that it can happen, I'll go and buy it.
For consumption to stay vibrant or for consumption to pick up, you need the investment cycle to pick up.
Yes.
Indians have eaten into their savings. Our balance sheet is getting more and more leveraged because Indians on an average had a very less levered balance sheet unlike other developed markets.
Yeah.
Now that investment cycle has not picked up, what will happen to the big thesis?
So let me put it this way, that agreed, we are now more leveraged than what we were earlier, but we are still one of the lowest leveraged. So there is still opportunity. We have a long way to go. Doesn't matter, as per capita income increases, maybe leverage will come down. Most of the leverage as of now has gone up because of real estate. I think over a period that's going to come down.
So some of the stocks where you've invested, which you own, again, you've been owning these stocks from 15-20 years, so it's public information now.
Yeah, it is.
It is more like public information. Do you think your publicly available portfolio, the trends and the Batas and the insurance companies of the world, can they give a 15-18% CAGR return for next 5 years?
I'm quite sure about it. Because the opportunity is massive. And in all probability, it will continue to be so at least for next 10-15 years.
What are you telling your clients who are getting anxious when they read newspaper headlines about consumers slowing down? How are you defending it?
So the only thing is, I say that these headlines today are the same what they were in 2000, 2001. So after that, market went up 6 times in 7 years. So I don't think this time is different. As they say in the markets, this time is never different. It's always the same. So it's economic cycles. So we were at a trough in 2000, 2001. We are at a trough again, and this will come up.
But it's also, I completely agree with you when you say that history may not repeat itself. It rhymes, and this time it's never different, right?
Yeah.
Sir John Templeton, the 5 most famous words. This time it's different. It's never different.
Yeah.
But what is different with each cycle is that the courses remain the same, the horses they change.
Absolutely.
2003, 2008, we saw a mega boom in commodity engineering and infrastructure.
Right.
2008 to 2016 or 17, we saw, or 2009 to 2017, 18, we saw mega boom in consumption, private bank, retail dominated franchise. The cycle has to flip.
Okay, so when we talk of a mega boom, we are talking of the markets moving. Okay, so if you take from 2008 to now, market is up only 60%. So that's not a bull run in the markets.
But these stocks are even.